Hello, my name is John Holland, and I'm an agent with Ebby Halliday in Frisco. Prior to this, I was in the mortgage banking business for 35 years as a senior credit officer for several large lenders.
And my name is Mark Alexander. I'm a business development officer for Navy Federal Credit Union.
Today, I'd like to address the topic of VA loans and dispel many of the myths that are associated with this misunderstood lending program. Myth number one: VA loans are complicated and take longer to process and close. Reality: this is simply no longer true. VA loans are processed and underwritten and closed just like any other lending program. Many of the documentation requirements relating to eligibility have been streamlined and automated, allowing the veteran to both obtain the DD-214 and the Certificate of Eligibility online. Myth number two: veterans can only obtain one VA loan. This is simply not the case. The VA loan program is a recurring benefit to veterans, and for further details, contact your VA lender and they can explain this in more detail for you. Myth number three: VA loans are hard to qualify for. Reality: like any other loan program, the VA relies heavily on automated underwriting systems to predict loan performance. Historically, VA loans has some of the lowest default rates on residential mortgages. There is tremendous flexibility of income and credit guidelines for a VA loan. While a major difference from other loan programs is that the veteran is qualified using net income, the program also utilizes the residual income method, which is gross income less all income taxes and expenses, as well as child care. There is an established minimum required amount a veteran must have for the balance of family support. If the veteran has this amount remaining after all obligations are paid, then the ratio calculations can be overcome. Credit guidelines follow industry standards, with some leniency noted in the period of time required to have elapsed since a foreclosure. It's important to remember all VA loans are subject to a clear CAVERS, which is a government database to ensure that all federal loans have been paid. Any defaulted federal debt will have to be satisfied before the veteran can obtain a VA loan. Myth number four: VA property requirements are more stringent than other programs and often take longer to complete. Reality: the VA has established property guidelines that protect the veteran from purchasing a property that will immediately need repairs. To that end, a termite report is required on all VA loans. The VA has established a panel of industry-leading appraisers with lengthy experience to ensure that critical components of the home are examined and blatant deficiencies are cured before the veteran takes possession of the dwelling. The Veterans Administration is a huge advocate for the veteran homeowner and will work directly with the veteran, the lender, and the appraiser to ensure the best interests of the veteran are protected. The VA has put in place turn time requirements for both the appraiser and the lender, whereby all appraisals must be completed in a timely manner. Appraisers must complete their written report within 10 days of being assigned the case. Delays must be explained in accordance with the Tidewater Act, and failure to comply may result in the appraiser being removed from the panel. Lenders have 5 business days to review the appraisal and issue the final CRV, or Certificate of Reasonable Value. So in closing, the VA loan program is a good alternative to conventional and other government financing. There is no down payment requirement, there is no MIP, and sellers can contribute up to 6% of the sales price. This all means that the veteran can purchase a home with less out-of-pocket money. I hope you found these points to be helpful. Thank you.